All right, welcome back everybody. So today we're going to take a look at price action and price structure, specifically the actual structure of the price and kind of understanding the rules that are associated with that, being able to identify supports and resistances and just kind of get a feel for taking price structure as the first thing that you want to be taking a look at before you start planning your trade setups. Real quick, before we get into that, I really appreciate you guys being a part of the channel and everything. However, I noticed that something like 90% of you are just visitors and are not subscribed to the channel. So if you guys like videos like this, you guys like trading education and stuff like that, make sure that you smash that like and subscribe button. Help support me and the channel, and that way you'll get notified when I release new tutorials. Also, I'd just like to mention real quick that if I do go over or use any other tools in the video outside of the charting platform, I personally use TradingView. All of the links for that stuff will be down in the description below. All right, guys, let's go ahead, take a look at the chart and start talking price structure. All right, guys, so I'm over here on the left-hand corner of your screen. For the purposes of this video, obviously, we're going to be using the Bitcoin chart. And this is a chart that I've actually posted quite recently on my Twitter. Make sure that you follow me there for all of like my trade updates and stuff. But I had all of these labels already on the chart, but I kept getting a lot of questions about how are you finding these levels? Why did you decide to put your horizontal support and resistances there? Today, we're going to be going over that. The most recent price action on this 4-hour Bitcoin chart has been very, very clear and very respectful of key levels, both on this higher 4-hour time frame as well as lower time frames. When a range is formed, typically you get some kind of a high, and after the top is in, you'll know because you'll get some like really quick reversal like this. So you can see we got this really big drop down, and then we recovered and everything. And ever since then, we were kind of ranging. So the way that you define your overall range is going to be I just draw horizontal lines here. Some people can draw areas too. I have another video on identifying like supports and resistances that goes into that in more detail. I'll link the video up here in the right-hand corner for you so that you can take a look at that. If you don't know at all how to identify support and resistance, it might be a good foundation for you to go back and watch that video first and then come back and watch this one. So we had our top here. We got our blow off and our first initial retracement, and then we started grinding upwards. We bounced, we made it around to the same area. Obviously, it didn't work. We got up here, we rejected, we climbed up again, we rejected. So down here, the reason why I have this line drawn here is because later on in this trend, while we were finding this area, the area of support more greatly aligned with this level than it did way down here. We got a lot more touches and a lot more price action around this 23.8 level than we did way down here at the 23.350-ish level. So that's the reason why I placed that line there. So what these X's mean are those are basically just like rejections of our upper range, right? So this is our price structure, right? This was just kind of like ranging. We defined a top and a bottom, on a horizontal range, and the check marks just signify supports that, the price bounced there, and the X's represent rejections, like at resistance and stuff. So that's pretty much how I do the check marks and X's. Again, this is mostly for visual purposes for, like my Twitter followers, and also for you guys while you guys are learning. Basically, what ended up happening through here is we defined this upper range, and then within this range, there was other levels of support and resistance on the lower time frame. So if we bring it down to a 1 hour here, and we focus on this area that has these gray dotted lines, okay? If we focus on this area, we can see that we had another level on the smaller time frame of support here. And once we broke down, we came up here and we rejected, okay? On this smaller time frame, we rejected here. And then this was a little area of consolidation. That's why there's a line here. We use that as support, okay? Right here. We use this area of support. We bounced, and then we got another rejection of this level right here. And then it broke down through both of those levels. Then we used this bottom, our previous bottom here, as support. We're going to go over the rules real briefly here, and I'm probably going to put them up on the screen for you so that those of you guys that are note takers can write these down. The very first thing that you guys need to know when it comes to price structure is that you're basically looking at higher highs and higher lows. So in an uptrend, you're going to have a high, then you're going to have a higher low, then another higher high, another higher low, another higher high, and so on and so forth, until eventually the trend ends up changing. Okay, so that's what ended up happening here. So our first signal that the trend might be changing was this drop. Okay, so all through here, we had a higher high, we had a higher low. Okay, we had another higher high and a consolidation for a higher low. Then we had another higher high up here and another higher low, another higher high, and then we got a lower low. Okay, so after you're already in a trend, it really only takes like this one lower low to confirm that, okay, the trend is probably changing. However, you normally want at least one of each, right? So this was our first lower low, and then on our bounce back, we got a lower high. So this told me right away that chances are we're going to be either consolidating or flipping over here. So basically what ended up happening here, okay, and we've got our price structure, right? So we had our high, we had our lower low, we had our lower high, okay. We kind of grinded forwards here. We got a higher low, and this is where people thought that we were going to be reversing again. And then technically we got a higher high. However, right after that, these lows did not hold. We put in another lower low, signaling that we were still in a sideways consolidation, followed by another lower high. And then the price ended up breaking down. We kind of consolidated into a triangle here. And then the price ended up breaking down. So currently, if I delete that channel that I have drawn and you zoom in on this price action here, you can see if you're good with identifying your patterns and stuff. Again, I've got another video on patterns that I'm going to be making here very soon. We kind of had this this bearish pennant form here, and then the price structure broke down. So I know that this is kind of hindsight charting, but the reason why I wanted to use this most recent price action on Bitcoin is because we're kind of getting the same thing now, right? Like if you look at these bottoms, you can see here that we've got one here. I'll turn this off. We've got another one here, and we've got another one here, right? So that's three consecutive, well, this is our low. So this is two consecutive higher lows in this price structure here. And we also have one higher high. Okay. Now, granted, these rejected from previous resistance and everything. So, you know, there is that. So what we would be looking for here, if we were going to be looking for a trend change, is we would want something like over here where the price structure would be moving in this direction to be giving us some kind of a higher high, right? Because that's going to confirm you've got your first higher low, your first higher high, your second higher low, and this would be our second higher high. This would be what confirms, in this case, an overall trend continuation. This would probably be when I would be expecting, you know, like levels of 26K. I hope that this video kind of helped you just real quickly understand how price structure works. Again, when you're charting, always price structure first, volume second before anything else. And you always need at least, in this case, for continuing an uptrend, you would need at least one confirmed higher low and one confirmed higher high in order to continue a bullish trend. And to continue a bearish trend, you would need at least one of each again, except in a bearish trend, it would be one lower low and one lower high, okay, to continue a bearish trend. So I think that's pretty much all I got for you guys in this video. All right, guys, so that is pretty much like the easiest way that I can go ahead and explain that. If there's something that I missed, or if there's something that you guys want more clarity on, let me know down in the comments below. I really appreciate the feedback from you guys as I get more involved on my YouTube channel. If you've made it this far, but you still haven't, make sure that you smash that like and subscribe button so that you get notified on my tutorials that I come out with next. From here on out this year, I am going to be focusing on hardcore on this YouTube channel. So I really appreciate all your patience with me. I appreciate all the love and support. Make sure that you follow me on all my other social medias, specifically Twitter, and stay tuned for news as well as live streams every Friday night at 8 p.m. Eastern. So before you leave, make sure you check all those links in the description below. And until next time, happy trading.